Welcome to Limitless Trading. Happy St. Patrick's Day. Today is March 17, 2025. We wanted to follow up with you on some of the levels that we had talked about last week, some execution, some levels going forward, what we're looking at, what we're not looking into FOMC. Remember, this is not financial advice. Please trade at your own risk. Now, what we had said last week was that if 55.31 defended, that we're going to see 56.37 and possibly 57.27. That's exactly what happened. We worked CPI. That was bullish. We saw that spike. The market cooled off on a little bit of tariff talk, but we had this trend line. We said if it keeps defending, we were going to head back north. Now remember, from here to here, this is basically it's a 10% correction. Does that mean the market is going to go all the way back up? Absolutely not. No one, even Tommy Lee, knows how high we're going to go. But what we saw in the last 2 days was the market is covering ahead of FOMC. Now, is this just short covering? Is it a short squeeze? Is it a bull trap? We're all going to find out together. Now, if you check out our previous video, we had said on the lower time frame, 55.31 was defending. And if it kept defending that area, we were going to consolidate. CPI was bullish. We caught that back here. And we said, hey, if we keep working this little white box here, we're going to go and start squeezing. And we also called the bottom. We said Thursday night was the bottom. Friday was going to start the pivot into OPEX this week. Now, does it mean we go up? Again, if you didn't catch the long right at 55.31, it's okay. Now, the other thing to remember, futures rolled today. So we're on ESM 2025, or you can just use the B adjust button on the bottom right down here. That's why this looks a little bit different than the previous video. The contracts have rolled just a little bit, but fundamentally the levels are the same. Now what we have to look at for tomorrow is, does 56.37 defend? Does 57.27 become support? Does it become resistance? We don't know, right? We know that we squeezed Thursday and Friday. Well, Thursday night into Friday, and now into Monday we have follow through. What I tell our guys in our Discord is, don't chase. If 57.27 continues to break out, absolutely risk on, but keep your stop loss a little bit under. As a matter of fact, there's a line right here at around 56.96. That would be a phenomenal stop loss, because the market may just go hunting for liquidity since we're still oversold, and then squeeze to the next level. We're looking for at 58.13, 58.55, 59, 5900, so on and so forth. But we tell our guys, take one trade at a time. If 57.27 rejects, can you take a short? Yes, you can short or retest at 56.37, because on the lower time frame, we are a little bit overbought, and the market rejected right here at 57.54. Does that mean that we're going to drop down to 5,700 and retrace? Absolutely not. The market could just buy this and keep going. Market makers can do whatever they want. And again, on the daily, we are still oversold. We're not overbought yet, but we said the key level that we needed to defend it. Now the follow through comes in. Again, we want to see 56.37 turn to support, or a continued breakout of 57.27. Now, the probabilities are that Tuesday is going to be a low. So what do I think is going to happen? As we're seeing futures now, the market is going to push up, and then start cooling off if the FOMC and sort of break even, right? The market makers are going to say, hey, we don't know if he's going to be bullish, hawkish, dovish. Nobody knows. We cover as much as we can. We sit and wait. Personally, our guys do not trade the conversation. We might trade at 2 p.m., the instant reaction to whether the rates are on hold, if there's any forecast, which we think there'll be a forecast for possible later cuts. But he's going to want to see one more CPI, which we already have. We've discussed in other videos. If you want to subscribe, like, and comment below to join our private Discord, we'll send you an invite. We could also have courses to teach you how to do this if you want to do this more independently. Comment again below. But in terms of level, we want to see is what's next. Do we break out continuously and go for a third day? Very possible. If you were long with us on last week, you could scale in and add a little bit more, but keep running those stop losses, because the market could easily turn 57.27 into resistance, which it is, and then ping pong here, 5637, ping pong, and then break out again. We do know that in September, this area turned into support. Does it mean it has to be support now? No. There's no rule that says it has to do that. Does that mean that 5727 defends and breaks out? Very, very possible. But again, we don't know. We trade one level at a time. We have dark pools all the way up at the 6,600 level, if you can believe that. And we have dark pools down here at 4,700. So we know our range is gonna be on both of the spectrum. So take it one level at a time. Trade your risk, but also remember that this defended. We want to see some sort of support rather than just keep buying the dip. But again, if we break out, you can risk on, but keep the stop loss because now we've defended two levels. So we are moving away from our sort of, trend line that we're looking for. Now, what we're looking at is if we hit 58.55 or even 5,900 into FOMC, we actually may take a short as a hedge to the downside. I have a feeling, and our team has a feeling, that he's going to say that he's not ready to cut rates and he wants to see more data, so on and so forth. But once we see 56.37 or 55.31 hold again, or we retest this trend line, we are bullish into CPI. Our next low is probably next Tuesday, March 25th. We're probably going to react on FOMC at 2 p.m. and then just continue and finish the trend week for OPEX, then roll over on Tuesday and then go long into CPI. Our final short for the season will be from probably April 2nd to the 29th. The 29th should be the seasonal low into the summer run. But again, take it one level at a time. Don't overtrade. On the smaller time frame, we want to see, like I said, we want to see maybe the 5,700 range turn into support. Maybe, a little bit overselling down to 5,650. Nothing wrong with all of this area working again, because again, there's a lot going on here through the summer. There's tariff news, there's CPI, there's so much going on. We're reacting to the levels. But don't get FOMO. Most levels do retrace. Just be patient with it. Let the market either pop up and defend and turn 57.27. You can say, okay, I'll risk on a little bit with a smart stop loss. Or, hey, let me just wait. Let's see what Tuesday evening brings us. If we can get 56.37 to become support, or if not, if we give it all back and go back to 55.31, the market says, hey, we covered our short and we're going to retest it. But take it one level at a time. If you're going to short a rejection, again, be smart. We are oversold. It doesn't mean you can't short. But the market is more likely to start recovering this as market makers start assuming or playing that this could be, the bottom for 2025, which we don't suspect. I actually suspect that April 29th, we're going to be somewhere, where is April 29th here? We're going to be, if we're not going to be at 5,400, we're going to be back at this range. I think Powell's going to disappoint the market. We're going to squeeze and then roll over after CPI. We also have more tariff talks on April 2nd, which is why we're going to take a little bit larger short. And as we had said on a prior video, VIX had a bearish divergence. It has support in the 17-19 area. And then we have good intel that says that it's going to spike into May, right after April. So we think that the tariff talks are going to get really, really tough. It's going to bring ES down very, very deep, if not 5,400, possibly 5,200. Again, we have dark pools all the way down to the 5,700 range. So be vigilant. Don't marry any stocks. Take it one level at a time. And if you have any questions, please comment. Good luck.